everyone. Joe Vitale, Vitale Wealth Management, here with the Graded Investments Market Update. All data gathered as of the week for July 21st, 2025. Let's get into the week in review. Majority of the U.S. indexes finished higher last week, with the S&P up about 6.61. NASDAQ was up 1.51. The Dow Industrial Average and the Russell 1000 were the two main U.S. indexes that finished lower by 0.05 and 0.19 respectively. We are starting to see that we've been talking about this. The international is starting to come back pretty strong. So we're starting to get a little bit more into that as well and make sure we've got some of that exposure in portfolios. Let's talk about bonds as measured by the Bloomberg U.S. Aggregate Bond Index. Also remains also regained some of the ground they lost 2 weeks ago, rising 0.04%. Now, the international developed markets, as measured by the IFA, lost some of the momentum they had earlier in the year, falling 0.29% for the week. On the other side, the emerging markets, represented by the MSCI index, have been catching up to their developed counterparts, gaining 1.7% for the week. Now, international developed markets remain up 19.31%, and the emerging markets are now up 18.4% for the year. So they are leading the charge this year ahead of domestic. Last week, major U.S. banks kicked off earnings season, reporting Q2 results, but this week brings more sectors and industries. More importantly, the Alphabet, Google, kicks off tech earnings on Wednesday this week. So that's been good so far. We also saw, today is Thursday, yesterday, we did see the market shoot up, and that was as a result of some trade deals that were reached with Japan and two other countries. So we'll talk more about that next week. Let's talk about the upcoming economic releases. It's a light week for releases. However, today, investors will get additional insight into the housing market. Building permits and new home sales. I believe the new home sales or existing home sales are down already. Will provide insight into the home buyers' appetite for building new homes, given the current mortgage rate backdrop. Additionally, investors will get a look at the market PMI, Purchasing Managers Index, and how the manufacturing and service industries are coping with tariff uncertainty. This is followed up on Friday with the durable orders report, which will update the market on whether companies continue to front run any future tariffs hikes on countries they import from. We're starting to see the tariff hoopla is basically not as horrible as everybody thinks it is. Some of it's being absorbed, modest increases, if any. But we're starting to see everything kind of shake out very, very nicely. So we're kind of encouraged on how that's going to look as well. Let's look at the market outlook. All eyes will be on Alphabet today as it kicks off mega cap tech earnings. Coming up next week will be Meta, Microsoft, Apple, Amazon. So all the big tech's going to be reporting earnings. Remember, earnings drive the market. The better the earnings, the better the growth, the better the market. Investors will pay close attention to these reports, as the Mag 7 now make up over 33% of the S&P 500 and have been the growth driver for the S&P earnings. Tariff uncertainties remain in the headline, but the European Union remains optimistic for a potential deal prior to the August 1st deadline. And Commerce Secretary Lutnick expresses confidence over the weekend that the Trump administration will link trade deals with key U.S. partners in the coming weeks. And again, like we just said, 3 of them this week. Japan was a big one. That is very positive for the market. That's why we had a pretty strong rally yesterday. And that's what we'll talk a little bit more about portfolio changes, which right now there were no changes in investment portfolios last week. But that's why when we look at growth in the different reports, we look at the G50, the G33, the Core Select, the G40I. Just because one sector is up, one sector is not up. So it's good to have a little bit of everything so we can kind of make sure we're getting everything, regardless of how the market reacts. Let's talk about stocks in the news. JP Morgan, owned in the Core Select and G50, reported its Q2 earnings last week, and investors reacted positively to the release. The stock finished up 1.42% last week after the company lifted its outlook for the next year income, a bullish sign for the year given the bank's typical cautious approach. And Johnson & Johnson, which is owned in the G50 and the Core Select, Johnson & Johnson reported better than anticipated earnings, and the company raised its guidance for the year. A lot of companies have been kind of apprehensive to give guidance for the year because of the tariff uncertainty. We're starting to see that coming strong. And it looks like strong sales of their cancer and heart health segments. This sent the stock meaningfully higher on the day and the week. The stock rose 4.34% for the week, which is very good. I know a lot of us own the Johnson & Johnson in our G50 portfolio, so we're very happy with that. That concludes this week's market summary. Thank you so much for being part of the Vitale Wealth Management family. If you'd like to get a hold of us, you know the number, 855-756-5700. Visit us at vitalewealth.com. Hope you're enjoying the summer, and God bless you. We'll see you again next week.